Welcome back to Financial Werks, your guide to scaling the heights of financial success. In this video, we're exploring Level 8, the Wealth Builder's Blueprint. This is the level where you shift gears and delve into strategies for substantial wealth accumulation. Now, it's time to take your wealth building journey to the next level. It's about scaling your ventures, diversifying your income streams, strategically investing in assets, optimizing your taxes, and planning your legacy. It's about creating a blueprint for financial prosperity that suits your unique goals, values, and vision. By the end of this video, you'll have the tools and resources to implement them in your own financial plan. One of the key strategies to achieve this is scaling your ventures, whether it's your business, investments, or both. Scaling means increasing your revenue faster than your costs, resulting in higher profit margins and greater efficiency. Scaling also means expanding your reach and impact, serving more customers and creating more value. But scaling is not the same as growing. Growing means increasing your revenue and your costs at the same rate, which can limit your potential and profitability. Growing can also lead to operational challenges, such as managing a larger workforce, maintaining quality standards, and dealing with increased competition. Scaling, on the other hand, involves finding ways to grow your revenue without increasing your costs proportionally, or even reducing them. So how do you scale your ventures? Have a clear vision and a scalable business model. You need to know what problem you are solving, who your target customers are, and how you can deliver value to them. You also need to have a business model that can generate recurring revenue, leverage network effects, and create competitive advantages. Invest in technology and innovation. Technology can help you automate processes, optimize operations, and enhance customer experience. Innovation can help you create new products, services, or markets, or improve existing ones. Technology and innovation can also help you differentiate yourself from your competitors and increase your market share. Hire and retain the right talent. Scaling your ventures requires having a team of skilled, motivated, and adaptable people who share your vision and values. You need to hire people who can perform multiple roles, learn new skills, and take on leadership responsibilities. You also need to retain them by providing them with fair compensation, recognition, feedback, and opportunities for growth. Seek external funding and partnerships. Scaling your ventures may require more capital than you can generate internally. You may need to seek external funding from investors, lenders, or crowdfunding platforms. You also may need to form strategic partnerships with other businesses, organizations, or influencers who can help you access new markets, customers, or resources. Building substantial wealth involves diversifying income streams. Diversifying your income means drawing earnings from two or more sources rather than from just one job. This can help you protect yourself against the loss of your sole job, save or invest more for your future, and enhance your financial stability and growth. Moreover, this approach fosters adaptability and innovation as you explore new avenues, products, or services, potentially tapping into previously untapped markets. So how do you diversify your income streams? There are many ways to create multiple sources of income, from passive investments to additional business ventures. Passive investments require little or no active involvement from you, such as dividends, interest, royalties, or rental income. Additional business ventures are income sources that involve starting or joining another business, either related or unrelated to your primary venture. Side hustles are income sources that involve doing extra work outside of your primary job or business, such as freelancing, consulting, teaching, or selling products or services online. By diversifying your income streams, you can create a blueprint for financial prosperity that suits your unique goals, values, and vision. Asset allocation is the process of dividing your portfolio among different asset classes, such as stocks, bonds, cash, and real estate, to achieve an optimal balance between risk and return. But asset allocation is not a static process. It requires periodic review and adjustment to reflect changes in your personal circumstances, market conditions, and investment performance. Maximizing wealth includes minimizing taxes. Tax optimization is not a one-time event, but a continuous process that requires periodic review and adjustment. Tax laws change, valuations fluctuate, and your personal circumstances and goals evolve over time. Therefore, you need to stay updated on the latest tax rules and opportunities, and consult with qualified tax professionals to plan and implement your tax strategy. There are many factors and techniques involved in tax optimization. Choose the right tax-deferred or tax-exempt accounts for your investments. These are accounts that allow you to postpone or avoid paying taxes on your investment earnings, such as 401ks, IRAs, 529 plans, or HSAs. These accounts can help you compound your returns without the drag of taxes, and potentially lower your taxable income. Utilize qualified small business stock, QSBS, and irrevocable non-grantor trusts. These are tax-saving opportunities for startup founders who own shares in their companies. QSBS allows you to exclude up to 100% of the capital gains from selling your shares, subject to certain rules and limitations. Irrevocable non-grantor trusts allow you to transfer your shares to a trust and avoid state income taxes on the sale proceeds. Invest in tax-exempt municipal bonds. These are bonds issued by state or local governments that pay interest that is free from federal and sometimes state and local income taxes. Municipal bonds can provide you with a steady source of income that is not subject to taxation, and potentially lower your effective tax rate. Use tax-managed investment products and strategies. These are products and strategies that aim to minimize the tax impact of your investments, such as tax-managed mutual funds, exchange-traded funds, ETFs, or separately managed accounts, SMAs. These products and strategies can help you defer or reduce capital gains taxes, harvest tax losses, and optimize asset location. By applying these tax optimization techniques, you can create a blueprint for financial prosperity that suits your unique goals, values, and vision. You can also increase your financial security, flexibility, and freedom, as well as unlock the potential for sustained growth. Wealth building isn't just about the present, it's about leaving a lasting legacy. Legacy planning is the process of creating a plan for how you want your wealth to be distributed and used after your death. Getting your estate planning documents in order includes wills, trusts, powers of attorney, and healthcare directives. Bequeathing your wealth so as to leave a lasting legacy can be done by creating a family mission statement, setting up a family governance structure, or establishing a family office. Planning to minimize the impact of federal estate and gift taxes can be done by using trusts, gifting strategies, or charitable donations. Leaving a charitable legacy can be done by creating a foundation, endowment, or donor-advised fund. Philanthropy is the act of giving money, time, or other resources to support causes that align with your values and passions. Defining your philanthropic goals and purpose includes identifying the problems you want to solve, the impact you want to make, and the legacy you want to leave. Choosing the right vehicles and methods for your giving includes donating cash, securities, real estate, or other assets, or creating a charitable trust, foundation, or donor-advised fund. Congratulations! You've completed Level 8 of Financial Freedom. You've learned how to create a blueprint for financial prosperity that suits your unique goals, values, and vision. You've also learned how to leverage your successes to maximize your returns and propel your wealth-building journey to the next level. Join us in the next video as we explore Level 9. We hope you enjoyed this video and found it helpful. If you did, please give it a thumbs up, share it with your friends, and subscribe to our channel for more videos on financial success. Remember, each level is a stepping stone toward financial mastery. See you in the next level.